Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, June 4th. Hopefully you're having a great day so far. We do got a one item here on the economic calendar. Otherwise, it's pretty quiet today. We have, starting tomorrow will be the, kind of gets us deeper into the job numbers. We'll have the ADP coming out with their report tomorrow. Weekly jobless claims on Thursday, and then the Bureau of Labor Statistics on Friday. So those will be the big days for what we're going to be looking for this week in terms of jobs. Today, however, we do got the factory orders for the month of April. So in March, it went up, which was a good month for us. It went up 1.9%. Forecasts are calling for a drop of 0.9% in April. However, it did drop, but not quite as bad as expectations, which is obviously a good thing, at 0.8% here. So let's jump ahead here to the news. Right now, the stock market is up. It's rebounding yesterday. We started the morning off a little mixed, and then did quickly change to a negative, especially the Nasdaq. Nasdaq's been taking quite a bit of a big hit, and a lot of it has to do with the concerns about new regulations or tougher regulations with the high-tech companies, especially specifically the big four. And so basically, because they're facing the DOJ's I think it's the DOJ, they're going out, basically looking at going after these companies with the antitrust lawsuits. So this is what's kind of affecting the high-tech industry. It's kind of got them on their heels here. There's also a report that one of the representatives from China basically said that the best way to work out these grievances between each other is to maybe reconvene with talks. So now there's some little optimism that maybe the U.S. and China might get back together and start talking again. So they're feeling a little bit better about that. Also, we've had a few Fed speakers recently. Fed member Bullard spoke yesterday and made a comment that, which is catching the ears, of course, investors, and this is kind of the sentiment amongst investors that that maybe the Fed may be cutting rates sometime soon. So this is right now the July 31st meeting is at 59% chance of possibly doing so, slightly better than 50-50. And Powell spoke today, who's the chairman of the Fed committee, and basically kind of said that they're trying to remain patient here, but they are watching the the talks between the U.S. and China, which inadvertently is going to affect the economy as a whole, and they're watching inflation, even though it's pretty tame so far. Where it's below its 2% target. If I recall correctly, we just listed that last week. Year-over-year is around 1.6%, and that's what the core is. And that's what they're going to be watching towards. So. Hopefully, we'll see something soon, something positive, whether if it's the Fed going to take some action. Hopefully, it'll be better sooner than later, primarily because once the Fed does take an action on these interest rates, it takes a good 6 months for the economy to absorb it. So we don't really feel that pinch, or if they're hiking rates, or feel that loosening much until about 6 months later after they've done it. So the economy kind of adjusts to it. So hopefully, if they do it, might be in time for Christmas time and stuff, heading into the first quarter next year, fourth and first quarter next year. So let's see how this is affecting the bond market today. I switched patterns here because it seemed like the investors were switching over from 4%, 4.0 coupon Fannie Mae to the 3.5. So this seems to be the more active one, and so I switched over to 3.5. Now, we did have a price improvement yesterday as the stocks turned negative yesterday. The bond market improved even greater yesterday, so we had a price improvement. Today, we're down about 11 basis points, so we probably most likely will price in where we saw yesterday. So if you remove the price improvement we had yesterday, we're probably closer to where we were earlier in the morning, the level here. And here's the 10-year. As you can see, we're about where we were yesterday, at 2.12, and again, that's giving the room or less pressure on mortgage-backed securities as they can improve and have better interest rates. So mortgage rates are about the same as yesterday. So if you omit yesterday's price improvement during the day, midday price improvement, we're the same as where we left off in the morning. All right, folks, you guys had a great rest of your day. We look forward to see you guys tomorrow. Thanks for watching. Bye-bye.